All right. Troy, so good to see you, bud. So good to
Thank you.
see you.
Good to be here.
You spent a lot of time on that road between Oklahoma City and Lubbock, don't you?
Yeah, unfortunately, I've got some health issues with my daughter we're dealing with at OKC
Oh,
with some
man.
some cancer stuff. So I've been doing a lot of traveling.
Sorry to hear that.
No, thank you.
Travels, safe travels. So, well, let's kick this off. Man, what a interesting first of the year. We talk about, I mean, you almost couldn't mess things up. Well, I mean, you could. But this volatility is so different, and you hear about it until you really start spending some time, in front of the screen and the charts and experience it firsthand, last quarter, holiday season, and then you got elections, but even then, that wasn't a major change. It was, I think it was bullish for the markets as a whole. But the holiday's over, and we talked about it a couple of weeks ago, and it just hasn't let up, has it? I mean, you really have to um, be aware of what's going on. Like what was going on yesterday. I'm used to elevators. Bears come in like an elevator. And then the bulls come in, they just kind of chew and things crawl back up. Well, yesterday it was the opposite. I mean, yeah, bears when the bears came in, they went in quick. But did you see those bulls when they would come in? How quick? Well, even today, you know. So I really want to focus on kind of trade management today. Two things. One, trade management, and then two, again, I'm assuming, but I kind of want to I want to hit some stochastics today, just an indicator, kind of the math behind it, what it is, and there's the RSI, stochastics. There's the MACD, just a plain old RSI. But I want to kind of show you the one that I like, just because it is definitely it's probably, I don't want to say there's really no such thing as a leading indicator, but it has really caused me to pause, and it kind of pointed me in the right direction accurately, a few times. When things are so quick, obviously there's no lagging indicator is going to be able to tell you what's going to happen in a few candles, but pretty impressive, just a basic stochastics. So I kind of want to hit that there, but trade management and stochastics. Any comments from anyone? Any major experiences or questions or observations, since we spoke last that you really want to kind of have the group aware of or talk about?
For me, I'm trading more in Globex now. Just do Globex, doing the evening, doing the morning before 8 a.m. Eastern time. Um, and if I've hit my targets, then I'm not even in the exchange. I don't even bother. One thing people have to realize at this point, especially Sunday evening, the very first candle dropped 580 points. And then it spent the rest of the night and day trying to get out of that hole that it dug itself in. So, what I think people have to start to realize is that he says things, but it's not always the truth. He's leveraging other countries and saying some, the tariff is what I believe is what did it. Made that, candle come in like that because he had just announced he was going to enact tariffs, only to find out now it's on pause. And he's using that as leverage for other countries. And so I think, I can see where people are in panic mode, and that's where you're seeing the sell off and, the volatility of, people then coming in thinking, hey, it's a great price, time to buy. The bulls come in. And so I've been doing Globex the last couple of days, and like today, I already hit my targets before the exchange even opened, and I didn't even bother looking. I just,
Oh, wow.
part of that is that temptation, right? Because there are rogue candles coming in very quickly. Today, you know, I know that there were supposed to be reports, you know, profitability from different companies today. So I'm sure that had an impact before and after they announced their earnings. So for now, I'm just staying out. If, like I said, if I'm hitting my target, I'm just staying out of it until things calm down. So
You know, I'm so glad you shared that because I know there's quite a few in this group. Um, you know, just got busy schedules, you know, when the US market is actually open. And I just noticed you know, prior to this volatility kicking off, you know, it was hit or miss in Globex. You know, so many times it's just real small candles and pretty flat. But I'm like you, there's it's really been some opportunities, you know, the week ago Sunday, you know, it dropped down, it gapped down, and it went down close to what 700-800 points, and that kept going down, you know. And then this past Sunday, just like you stated, but then it instead of it keep going down, it was going to be a repeat because of the Canada, really the North America tariffs in China again. But it did grind back and it filled the gap, you know, after the market closed yesterday. So it was you can't just jump in and assume because hey, last Sunday, you know, even if we believe, well, was it 2 Sundays ago was the deep seek? Yeah, and then this past Sunday was kind of the tariffs. Yeah. Um, so but I'm with you on that Globex. I have a couple accounts where I'm just kind of studying Globex, and I actually do really well on a couple accounts. It's easy to well overall I just do pretty well. You know, again, it's just with as much things as move and things like that. You know, as long as I'm on the right side of the trade, you know, and that's just another thing we're going to really focus on today is how do you know if you're on the right side of the trade? Well, it's really it's not that difficult. At least it shouldn't be. It's not as easy, you know, if we're not patient, you know, to get in because then all of a sudden it can kind of change on us. But there are some things that it's like today was just really refreshing to me personally because I found myself really disciplined as far as making sure I was on the right side, you know, before I'm doing any type of scalp or anything like that. And so when these quick, fast candles came in, they actually went the direction, you know, that you know of our 50 of our moving averages, you know, that 1 minute in particular. Um, and so that was really good. So that's very powerful. You know, again, Globex, same when you have that type of movement in Globex as you do in the US market when it's open, you know, the same rules apply. You know, as far as hey, are you on the right side of the trade or not? You know, and do you take a few small sure wins, call it quits, or are you, you know, trying to go for a target and you kind of got the right size and you kind of let it go up, pull back, go up, pull back. I mean, again, that's size is what is very important, you know, because those are two different kinds of trading, two different strategies. You know, I think I shared I'm a scalping micro trend within the range trader, you know, so once I identify, hey, I've got a micro trend, now I'm going for targets, you know, and generally that opening range is somewhat target based. Well, I scalp until like usually that first hour when things kind of settle down a little bit because it just goes up and down so fast. But once things kind of settle down after 1 hour, now I start looking at overall bias and I start looking at, you know, fair value gaps and really start uh, considering, you know, what are reasonable targets, you know, and then that's where I kind of want to stay in a little bit longer until I'm gonna get till the trade goes against me, you know, and I'm not going to fight it. So, so very good. I'm going to go ahead and share screen. Did anybody else have anything else they wanted to add or say? Because that was a great add-on, Anthony. All right, here's today. RUC in TradingView. Let me confirm that first.
Yes.
Okay, perfect. Okay, just real quick while this is up here, we can kind of see this really is kind of today. Here's what I was kind of dealing with when things kind of opened. We had this big bullish move, in the market opened, and again, if I, that kind of target based big bull move, I kind of had things set up around 1.5, 2 Rs and got out, and I'm still getting in the discipline of say, well, what was my reason for getting out? I think I actually seen pretty solid red, and when we come about a third of the way down, I think that's one of the reasons I got out right here. And it was a very large. I mean, again, I was looking at 1, 2, 3, 4 large bull candles, and I think last week we talked about, well, it's like until you trap these bulls, you can kind of stay in the trade. But with this large move here, this was a solid red coming down here, and yeah, this should have been just where this wick is would have been a valid, fair value gap, wasn't even filled there, and then it took off bullish again. But a little bit different when it's moving that fast and you got those larger candles. You kind of hit 1.5 to 2 Rs, and it's like, hey, boom, kind of done with that account for the day. And then we've got our 4-hour resistance up here, and this line has been up here for a while, and it just kind of ties in. There's a little activity here, but all these wicks here and all this static, and so this and clear over to here. So this has been on my chart for quite a while, and I just can't stress how valuable these purple lines are to me. Again, 4 hours, and I will update them from time to time. But like this one here, I've not changed in a while. You can kind of see how it wicks down into that, wicks down into here. We got support here, resistance support here. And again, those just become extremely, extremely valuable. But here's where, this yellow line here is really just a point of control from a volume profile. It's real hard to see on this black background. Let's see here. I don't even know if it's worth. Worth seeing, but you kind of see the light blue, how these spikes come out. You see that, Troy? So this is a lot. All this is based on specific price, volume tied to price. Down here is volume directly correlated to time. So at this time, there was a big volume spike. However, here is your actual price within this big bear candle where the majority of the volume really was. And then again, even down here, there was a big volume, a lot of volume down here. It's probably where it was kind of getting bought back up, and this kind of would probably stopped it. But here was probably a little bit more selling volume happening here. But up here, we lost momentum, and here's stochastic. What does it look like? So it's just SMI. Default settings. And I don't know if anybody's interested in a stochastic, but I want to kind of explain why I think why it's definitely adding value to me. And I'm just going to confirm that this is the one that I've got. Just spell the word stochastic. Is that is it? No.
I've been utilizing the stochastic just to help me determine when the market's going to turn down, so I should exit out of a trade. It's like a secondary, decider, I guess.
Yeah, yeah.
Especially if I see that my target isn't being reached.
Trying to figure out what this SMI kind of stands for, because this is the one that I want to make sure I protect, because I really like it. I really like it. Because what I'm finding out, or MACD, just any RSI, stochastics, they kind of can provide us the same thing. I've never been successful with a MACD or just even some RSIs. To me, they're too much all over the place. And I'd just as soon use a moving average and higher highs, lower lows. But this particular stochastic here, because the stochastic is you've got your kind of your signal line. So your kind of your so you've got your SMI. So it's okay, EMA based. I like that. Okay. But your length of three, so three responds a little bit quicker. So this is kind of your D is your signal line, this blue line. And that's when that's above, the actual stochastic or the orange line. I mean, obviously things should be bullish, but we don't really care so much about this diddle in the middle, other than the steeper our signal line is, then hey, stay in the trade, or wait for that pullback, because a lot of times it's moving pretty fast. But what I like about it, it's basically, the closing price minus, your lowest price in X amount of periods, like 10 periods, divided by the highest price, minus the lowest price, times 100. That's irrelevant. Sorry, I need to understand what goes into to an indicator for it to do me any good ever. But here's the stuff that I'm really looking for is look at this bullish move up here. And if you got a RSI, MACD, or stochastic oscillator of some sort, notice how things are kind of showing bullish here, but notice how our signal line or our blue line, everything flattens out and we actually start coming below, even though we're making higher highs here. That to me is so powerful, because now I'm not, the probability, not saying always, but the probability that the bulls are losing some buying pressure and things are going to kind of go flat for a little bit and possibly even kind of have a little pullback becomes very probable when you have a divergence like this. So higher highs, but your stochastic is actually signal lines kind of starting to fight and go below your actual stochastic, your trend line. That's what I'm looking for. And that's what Kevin's seeing. When he sees kind of this signal line come back below, he's thinking, hey, things might pull back a little bit. Okay. Even when we have this high here, it kind of comes back up. But the fact that we're well below this over here, and it's hitting that 4-hour resistance, my confidence of us going or continuing in a trend day is very low at this point. Very low. And then we can't even make this back above, 75, let alone 80 again. That's another thing I'm really looking for is when I'm in the gray and outside of this midsection, then hey, things are getting exhausted. Again, typical is it overbought up here, oversold down here? I mean, that's the common language on any RSI, MACD, what we're looking at here. You get up over 75, 80, overbought. Down here's an oversold condition. That's the generic thing we're kind of looking for. But to really see these indicators, like this, it kind of comes up and then crosses back over. Well, this look where this is happening. This is happening at the high of the day. Well, it's almost the high of the day. I think, no. Yeah, it was the high of the day. But right here, this is almost leading. I mean, that's what's crazy is you can kind of get these crossovers when you still got a pretty high price. And reason that's so important is because it's like, hey, even though I've got a very strong bullish bias, when this crossover happens, and as long as this stochastic is still pointing down, we don't even want to think about, diving into that pullback yet. Okay, and of course, this candle here, things were slow and grinding right here. Kind of brings me back to one of the objectives we have today is how do we know which side of the trend we want to be on? Again, the red is the 1 minute 50 SMA. Hey, if we're got open and closing candles below on whatever side of that, that's the direction, period, for Jake. I'm not going to go long. The only exception is like a reversal candle that might be below, a hammer might be below, things like that. But that's, I'm also looking at this pretty heavily. Am I down my stochastic? Do I have reversal criteria coming in? Am I at some valid support levels? Do I have clear reversal candle, indecision, 5 minute 50 SMA, candles actually closing above that going forward? So not just on a whim going to get in, because there's always risk when I go opposite or long when I'm below. But I'm looking for that valid reversal. I got tricked here. I actually had an entry in here. But I was okay. Because I see here, I trying to remember what I actually did to it. I stayed in it. Because again, I kind of had the right size, bullish, and because I started seeing this slow down here. When this bear candle started coming in, it was kind of grinding around there a little bit. And it kind of kept coming down. This is the only reason I didn't panic. But I kind of this was a real quick high volume, this volume spike here. I'm like, okay, this little liquidation is over. And here we'd made it about a third of the way up. And so I got in and I didn't wait for this candle to close either, which is, and I noted that. I got a little anxious. If I would have waited for this to close and then wait for it to actually get confirmed with some follow through, then I wouldn't have put myself in a bind. So that was a mistake. That was an error on my part. I got in a little quick. But I didn't panic. This is what saved me here. I was down low here. I'm like, you know what? This is, and it kind of come down pretty slow through here anyway. And then a nice little bounce. And as soon as I seen this indecision and wick, then I was really comfortable. And it didn't take long and we was back up. And I also figured this was liquidation. I did figure we'd come back up and possibly retest some highs, and we did. And actually, I got out up here. As soon as this could make a higher wick, I think it didn't take much of this bull candle to get out, and my entry was over here. So I think I took only like a 10-point profit total. It wasn't very big, but I'm like, whew, I've already sweating, got my money back, made a profit, but all of a sudden it started getting bearish. And I think I took like 10 points. It wasn't much. And then I got back in over here again. But here is where, or another example. Well, it's frustrating. I can't, the candle can't grow. But I'm trying to remember on which account I had. I was actually, it was wealth charts. And I had small trade in over here. And it was only for like, it was just a scalp because things were just kind of grinding. And all I had to do was come down and take out this low of this candle. So I think I got in about right in here. I'm below all my moving averages and copy trading those accounts. So I don't look for big trades when I'm copy trading because things can go so fast and then it's that many accounts. I'd rather recover one account than a bunch. But anyway, I was in long and I blinked for a second. So I was in, I just was shy of my target right here. And it turns around, it comes back up. But I'm below my moving averages. My stochastics are down here. So I'm feeling comfortable, to be short. And then boom, that happened within like 1 minute. And it was so fast, it was a little frustrating. Because it just blew through it entered and closed, where it could have been a lot more, I guess is what I'm getting at. And should we complain about that? Not really, no. But here's what I want to share is I'm below my moving averages. We're coming down from some 4-hour resistance. And when I'd kind of seen this wick come in here, we had such a strong bull move here. I was kind of looking at a double top. When these candles come in and took out this high, then I'm kind of not thinking double top as much. And that happened twice today because I'm very partial to my double tops, that second top here being slightly lower than the first top. That to me makes a more valid double top, and I have I give it a higher score, and so when these came in right here, I was now, okay, it looks like double top may not be a play today. We may just continue to grind sideways to bearish the rest of the day. I wasn't sure. But then this kind of come in pretty quick and then a good follow through. And then we started kind of grinding here sideways and we could not break back above 1 minute 50 SMA. Stochastics were going down. We weren't quite down all the way yet. So I had while I was trying to really figure out, is this going to be our move down to VWAP? Is this going to be a break of the neckline here? So I had a trade in and it just boom, boom. It was over that quick. But the stochastics in combination with this red line, 1 minute 50 SMA, regardless of what time frame I'm on, that's what ensured that I was on the right side of the trade when this flood liquidation came in. Even though overall assessing bullish, it's like, hey, why am I taking bearish trades on a bullish day? And again, just that's where my size is small, targets are small, just kind of scalping, but all the conditions were there. We had the high of the day, good follow through here, and we're below our moving averages and small size and small little scalps. And then using some other confluences here on the right side of the trade. Let's see here. So that was over here. Identical to here. Identical right here. When this failed, these actually, well, this was a little winner. I was playing these wicks. I'm like, man, there's some bears that keep pushing these down. I had a little scalp right in here. It's like boop, boop. And then turn around, lower high here. We come back down. These rejection wicks here. And I think it was grinding right in here. And this one here was just a small scalp that I only had I had a 5 micros copy trading account, and it was just 5 points. It was just small. And like, hey, $50 on these 7 accounts, that would finish up my goal for the day. Well, the slippage, they ended up paying me 10 points because this come down so fast that it actually was 10 points when it got filled. So it got filled on my target up here in the body where things were moving pretty slow, and then she just went boom, just dropped down. And I was like, what the heck was that? You know, but it was a 10-point win on it with a 5-point target in there. Why is that important? Because I'm not used to seeing, this is 659 down to 608. So again, at 50 points, I mean, I guess I shouldn't say not used to seeing, because we seem to say this every week. But this is 50 points, but this happened in just a few seconds once she broke. You know, same thing right here. This was a little bit more than 50 seconds, but the initial move was instantaneous. How much was it going to follow through? How much was this going to have follow through? That we didn't know either. But yeah, but 50 points in just a matter of seconds right there. But where I'm so grateful is, even though we're bullish, nice trend here, this bear candle, you know, you got wick, inverted hammer, wick. So not staying in if I was long anymore. That's it. That's all exit criteria, because we know that when things turn, they can turn fast. So that's exit criteria. This large wick coming in right there, and then we got some lower highs. So at a minimum, I pushed my stop all the way up into this area here, and I'm out probably in here anyway. And now I'm closing, opening and closing below my moving averages. So if I'm looking for little scalps, and I'm looking at my stochastics down here, I'm coming from the top. They are pointing down. We'll never trade against a stochastic. Never. Never. I yet to see where that really pays. So this is pointing down. I'm below my moving averages. So I'm in a small little scalp, and it worked great. Any questions on the stochastics? You've heard me mention them a couple times this week in the charts. And I just remember Svetlana, she had just kind of mentioned, I think, using some RSIs here a few weeks ago that she seemed to like. But I've never been successful of being able to make a rule, in a sense, with one of these type of indicators until this particular stochastic here.
Hey,
And,
Jake, how do you, because your top to bottom indicator is longer than mine. I'm using the same one, the SMI 1033. How are you changing your oversold or under or overbought lines?
I think I got I don't know if I got 70-30 or 20-80. 70.
Oh, okay, I see. Perfect.
Yep. And I can't remember if that was the default or if I did change that. What was yours?
For me, it's defaulted to like 40 and -40 there. So it's just
I did see that. That was too tight for me. I pushed mine out. I did push mine out.
okay.
20-80 was a little too much. And so yeah, this positive 70, minus 70. So basically, when we're above 70, we start looking for that possible, hey, the bulls could be ready for a little break. We start getting below, you know, this minus 70. Hey, the bulls might start getting hungry again.
Yeah. Okay, perfect. Thanks.
You got it.
Jake, do you also utilize the stochastic for identifying divergence?
That's one of the most important things. What we talked about here. See this higher highs? And then when this divergence here, it's actually getting lower while this is going up. That is paramount.
Yeah, and even that that high of the day, if you look at the stochastic, it didn't get up to your 70%. So that to me indicated it likely could turn down here, even though we were making new highs. The energy or the momentum in the market may not be there. So
Yeah, that's valid. I kind of let each wave kind of stand on its own, but absolutely great observation. We went up and messed with I mean, literally, here's the high of the day, and it did retest it right here. And yet you look at we're barely at 50, on the stochastics. We're over here, we're clear down again around 50, but we were coming from much higher areas. But here's price going up, RSI, MACD, stochastic going down. Here, pretty, I guess on the short term here, it's really kind of going up ever so slightly. If you go from there to there, there's a slight increase, but a pretty big increase on price where this is really flat. So all that does is say, hey, it doesn't look like we're seeing a bullish trend where it's just going to continue trending all day long. There's two reasons why that's important to me. One, I'm a little more comfortable to stay in the trade a little bit longer if I did get trapped short, going short, even though it's kind of overall bullish day. But I'm like, because actually I was short over here and I was getting real uncomfortable. Shame on me for being in around that 4 o'clock Eastern Standard Time anyway. But I was about ready to make a decision here to actually add a little bit to my position. This candle come in, and it was instantaneous. It come right down, boom, entry through my targets. That was just lucky, because this candle here, I ended up kind of getting it come back up, and I kind of ended up getting short in this area here. And before I knew it, this actually was pretty fast. I seen this rejection here, so I stayed in a little bit longer. It was this candle here that was so darn fast when it went up, and I just. But the faster it goes up, the faster it's going to come down. But that was not a real good trade. I should have let things settle down after this come in. I should have let things settle down a little bit. I got back in short, thinking I was going to come down and retest this wick, and it didn't. But this candle saved my bacon. But that divergence is probably the number one takeaway to recognize, so here things are moving up. We're going from minus 70 to positive 70. Okay, right here. So just very bullish. Bulls are pretty strong. Even this stays above and kind of points up when you have this big bear candle come in here and a hammer. That is when you don't want to really worry about going short. We had a good reversal here, maybe take some profits off the table, but this is just what we have to assess as a healthy pullback on a bullish day. Because now we would not trade against the stochastic here. Especially even though this is a bear candle trapping this bull candle, there's beautiful follow through. This is another big bear candle for a moment, but it doesn't last long, and then you've got an awesome bullish hammer. Bulls come right in and buy things right up. But now we're back above 70 and pretty flat here. Price continues to go up. It's not exit criteria, but caution. And then you start looking for, hey, what are some of my exit rules? Okay, I've got some of these large wicks, lower highs. If this bull here gets trapped, then I'm out. I'm still above my moving averages here. Don't really have to worry about getting out. But the fact that I got some divergence going on here, and then this is another thing I really like about it. We have a pretty distinct crossover happening right here on the stochastics, but we still got price hanging up here pretty good. Right here is a reason to take those profits off the table and wait, see what's going to happen. We can be extremely bullish. I'm going to go back up, take out the second high of the high of the day over here. Not when you got something like this. I've just never been able to quite pull this out of an RSI or anything. This one here is just, to me, a little bit more black and white. And so. Any questions on the stochastics? And if there's any indicators or anything that you guys want to go over in different forums, just to maybe better understand how to use them, what they mean, please just kind of drop in the group. And because I've looked at a lot of them, again, moving averages and really understanding how quick price is changing, you know, and what color those candles are. I mean, that's price action. That's market structure. That's the fundamentals. That's where we want to cut our teeth. We get too dependent on indicators. You're going to be setting yourself up. However, when you find something that you tend to really resonate well with, that you have some confidence in, and it can give you that, you know, because I think one of my problems is I got too many different platforms and different accounts, that I may lose a little SA from time to time, you know, and that's where just a hard-coded 1 minute 50 SMA rule, you know, and now I've really enjoyed this stochastics, you know, for the past about 10 days. Those are just things that, just like today, again, things just move so quick. But with the stochastics, with my rules for the moving averages, I was protected, you know, both times. And I think that's extremely valuable.
So for me, I use the RSI. It's real simple. And really, you know, because I think we're all looking for that edge of what do we see happening? How long is that trend going to continue? You know, because we all want to get out, you know, at the top, or, you know, certainly not buy in at the bottom. I just like the RSI because it's real simple. I don't, you know, that's the danger when you put too much into any one of your indicators. It's always best if you can have a couple, you know, 2-3 indicators that corroborate and saying, you know, is it clear to me, especially if you're trading in a momentum, is it clear to me which way is it headed? Do I know how long it's going to stay in that momentum before there's a reversal coming? Is the reversal coming, and is that just a pullback, or has the strength, whether it be bullish or bearish, has it lost that momentum? And now we're in a completely different momentum. And now you just got to change, you know, your tactics, you know, is to say, hey, you know, if I was going bullish, now I'm just looking for those bearish. And I will say this, though, in the volatility, as you can see in that chart, and yeah, I'm big on wicks. One of the things I'm finding is, instead of going for the 10 or 20, just go for 5 points a trade. You'll have to do a few more trades, but if you're winning, because here's the thing, we always talk about unrealized gains. When you see those large wicks, it's pulled back. So you got to figure, how much unrealized gains did you now lose in your drawdown? So if I go for 5 points, if I'm in the right direction, I don't usually encounter the pullback as much. So it's less unrealized gains. So
You said a couple things that are extremely powerful.
yeah.
That the like 5 points, you know, that's kind of what I'm using on the wealth charts, you know, quite a bit. Again, there's 7 accounts there, and I'm copy trading them, and just taking a couple profits a day and leaving them alone, and trade my Apex larger accounts primarily. But that's kind of, I've got my thing set up actually for like 5 points. Exiting in strength, and that's really what you said right there. You know, you don't have the wicks, the drawdown. So whenever you're exiting at your target, you're exiting into strength, and you basically have 0 drawdown. So let's say if you've got one candle that moves, you get 30 points. Let's see, where's a good example? We'll just say this candle here. Not that one. Okay, right here. I mean, you're in the move. Got a nice follow through here. And so at 546.25 all the way up to 78. So we'll just say 576. So there's 30 points. Well, then it pulls back, 20 points. Okay. And then it kind of closes and you're like, oh, that's a reversal candle. I got my shooting star wick. It already pulled back 20 points. I'm out. Versus you're above your moving averages. You got a nice hammer right here. This wick comes down. When it comes back up, 5 points off the top of this candle. You got the same thing here. It kind of pulls back and you're like, just the follow through. So, 5 points. How many times do you not get 5 points? Moving averages are down here. You're kind of getting in, at the bottom of candles. And if it kind of comes sideways, but I've got some higher lows here, I will many times just over and over, even if I have a bear candle right here, if I'm above my 1 minute 50 SMA and I get bear candles that start turning green on me, I'm going back in and I've got 5 points before I even get back to the top of that bull. I'll actually do that. This following here, I usually don't do. It's more when they're sideways. Man, there's some great. Here's where if you don't really know what direction it's going to go, and we've had this real fast bullish. Here's where if I'm below my 10 EMA and my 1 minute 50 SMA, bull candle comes in here. I got this wick. I'm looking. As soon as I start confirming I've got some bear movement coming in here, I'll take 5 points right there. And then I'll wait for the next candle. When it comes back up here, I start seeing a wick. I'll go for 5 points, knowing I'm going to get 5 points way before I even get to the bottom of this candle. And then the same thing here. Once I get up here, I can get 5 points before I even have to worry about getting to the bottom of this candle. That works excellent with the rule. You're on the right side of the trade right there. 5 points is, again, you could look at it and say, well, it'd be kind of nice just to stay in and wait for that reversal. That's true. There are absolutely reasons to do that on maybe some larger accounts, what have you. But if you're looking at maybe even copy trading or just not comfortable with the overall, is this sideways? Again, we're kind of breaking out. I have no idea. We're so far away from VWAP today. I never did plan on coming down to VWAP. And here's our 5 minute 50 SMA. I'm like, hey, when we get this up away from VWAP, a lot of times that'll become the low of the day. Well, the last hour and a half, we finally break below that. But here's another example. Hey, well, these wicks here, I actually, and these right here where this was flat and we actually had a little cross, I actually was only going short. But here's where I was doing 5 points at a time. And there was like about 4 of those right through here. Now I'd get in all these wicks. And it was 5 points. So that's a strategy in itself. To me, the number one rule is if I'm going to be doing some scalping like that, I want to know what direction. For the most part, I'm wicking above and below, or the body of the candles are above and below my moving averages, I'm not touching anything right through there. But once we start having this clear break here, now this is where I was kind of set up, because I had my 5-point scalps kind of set up in my copy trading. Well, when this candle come in, I just took a sip of coffee. I looked back and it was over. I didn't even see it happen, because this was instantaneous, an instantaneous drop. But that's where if my bias is bullish, and so even though I'm down here, I want to be buying back up into the moving average. That's the point I'm making, where that's what's biting me. That's why it's a hard rule. I'm not going to scalp back up into my moving average. The only, unless I get like a reversal candle, that's a different conversation. But everything's bullish. I'm only going to look for longs today. Hey, 5 points here, 5 points here, back up to the moving average, 5 points back up to the moving average. Yes. However, I've learned the hard way. I put myself into a bind where I have to just sit there and recover trades for like an hour. It's like, wait a minute, dude. If you're below the moving average, what happens if you wait for it to go to the moving average and then do your 5 points until that doesn't work anymore? Because then when it doesn't work, that means now you're crossing back over. So now you're up here. Now you're looking to go long above. A caveat here, this is valuable, is my target was above this red line. I didn't even have to make it back to my red line to get my 5 points. That's another condition required for me to go back into the red line. Plus, I'm high on my stochastics, RSI. I'm high here. So the only reason I was actually going short under these conditions back into my moving average, because of my stochastics, selling pressure. The wicks were on the upside, not the downside. And that's a very profound observation, by the way. If your wicks are on the bottom side, hey, be very cautious about shorting. If your wicks are on the top side, even though there's just as many buyers as sellers, but the buyers or the sellers get the last word when there's a wick on the upside. And then when that happens multiple candles over, it's just an observation. More times than not, this indicates more of a bearish breakout, which if it's going to break out with wicks on the upside, it's usually going to break to the downside. But it's a bullish day. This is a beautiful hammer that come right in, and we went back up. But again, going back into what Anthony was saying, I was just looking at breakout here, but I had my target was before my red line on every. I think I did about three little trades right there. Yeah. So that's a way. The best for me, if I'm getting a hammer here, I get a good movement here when I'm above. Until I start having no clue what it's going to do, I do want to stay in. But now I've got every one of these are reasons to get out of a bullish trade. So that's where, hey, if I'm going to trade anything, heck, I'm going to at least come back and retest my red line. What's significantly different, Anthony, on your RSI versus the stochastic that we just kind of reviewed?
Well, for me on the RSI, it's just one line. And all I'm trying to do is, if you put RSI on there alone by itself, and it wiggles. And so I'm looking, is it trending down or is it trending up? And looking at the chart to say, hey, does that coincide? Just a regular RSI. So you see, I've got my midpoint, and I'm just looking to say, hey, is that line moving up or down? And if you're watching it as it's happening, as the candles are forming, you'll see that it coincides. If you go back and cut a part of the chart and then just hit play and look at your RSI line and look at your chart, your candles, and you'll kind of see that, okay, yeah, it was wiggling up and or down, and the candle did exactly the same thing. Like there, the RSI is certainly facing down. I'm still in the trend and I can continue to trade. Now I'm just watching to see if it hits bottom and bounces up, and then I know, okay, my trend is changing.
Still 70-30, so
It's-
it's about the same.
It's not fast moving, which is the other thing I like, is
Yeah.
that it gives me time to act rather than react. So that's what I like about it. Now, the other
Yeah.
thing is overbought is something interesting too. Our natural tendency says, oh, we're overbought, I got to look to get out, but it doesn't say how long you can be overbought for.
No.
So that's where, how many times we get out early, and then guess what? The next 4 candles went even higher.
Yeah.
So again, that's where I'm looking at the RSI and saying, well, if that line is still continuing up and it's above 90, so, I've got on the low end 30, then you got 50, and then I think standard says 70, I go to 90. Just again to confirm that, if it's overbought, if you can go to 70, you can go to 90.
Sure.
But I have it set for, like I said, 30, 50, and 90. And like I said, so I've used that, and I find that to be pretty helpful. I mean, you can see the lines on the RSI kind of coincide with the candles. It's just one simple line, I know, the other ones, you got multiple lines in there, but again, I'm not trying to depend on one indicator alone.
No,
Um,
that's wisdom right there. And I hope everybody kind of heard that, just trading with an indicator. It's I don't know of an indicator that's going to make you really probably successful over time, but when you can make it as part of one of your heavily weighted biases, of when to consider getting in, versus, again, if we got a lot of this green shaded area, which kind of we're hitting kind of above that 80, so we're kind of in an overbought. But again, we continue to make higher highs, but again, lower highs on the RSI, which is, and that's why I say the RSI, the MACD stochastics, they give us the same information. That overbought, that oversold, divergence that Kevin, you'd kind of mentioned. How does your brain work? All these squiggly lines here don't work well for me. I like the smoother, but again, everything Anthony's getting from here is exactly the same. It's which flavor of ice cream do you like? Do you like vanilla or chocolate? Ice cream is ice cream, but what can we learn from a high RSI, a high oscillator or stochastic, or even a MACD? What can we learn from lower highs, up above, around this 80? When price is going up still, okay? It's not a reason to go short by any stretch of the imagination, but it is maybe a reason to consider taking some profits off the table. Definitely, hey, I'm not going to add to my position, even though everything's bullish. And now you start looking at your plotting support and resistance. Hey, we're grinding up towards some already resistance that exists on the chart that coincides with a high RSI or a high stochastic. That's what we're getting at. Bringing that information together, then you start, for me, today was a good case in point. I started looking more kind of at a double top. I started looking at, hey, their bulls are a little weak up at the upper part of our highs of the day. There's not a lot of strength up there. We're having a hard time breaking through there. Our divergence was a confirmation, and price just wasn't all that strong up there. It's completely different when you have a trend day at play. When you have a trend day at play, a lot of times you're down here around your 50s, 60s, and your RSI just has a pretty nice slope to it. It goes up, but it's not up in the 80s and 90s most of the time. So no, that's excellent. And MACD, RSI, stochastics, to me, they're giving us the same information. How do you want to use them? And that's why this looks pretty similar to what you use, Anthony. I mean, you don't use
Yeah.
the crossover at all.
No, not at all. Because again, I'm really just trying to get, I mean, we all want to know what's coming ahead, but
Yeah.
also most, if not just about all indicators are lagging indicators. These indicators are based on previous history. And so that's just practice of saying, hey, I know this is just a pullback, or has the trend changed and now we're reversing ourselves. That's just experience of just knowing that. You're not going to get an indicator that's going to tell you ahead of time, oh, this is just a pullback, or so like I said, it's just, I like to just keep it simple, not too many lines on the chart. You start doing that, then it's hard to see the candles. And I spend a lot of time just watching, candles. I'm just watching the formation. Again, the battle, and that kind of lets me know, is this a real candle that we see at the end, or is this a result of what happened in that, 1 minute, 2 minute time frame that it took, or 5 minutes, for the candle to form? And I think now we've been trading long enough to see that, where it starts off bullish and ends up bearish, or vice versa. And if you just came to the chart to look at it, you wouldn't realize that there was a change, there was a battle and a fight. So that's where I like to spend some time looking at that. And that kind of helps me kind of say, am I really in the trend, or is this trend about to reverse? Obviously, candle size, the size of the body, is going to tell you the strength. That's the other thing. I mean, as you're looking at the chart right now, you see some candles, not a lot of body to it, versus other ones that, when you're looking at strength, especially if you're looking at momentum, am I strong in that momentum, or should I be looking at the possibility of a reversal coming, or sideways, choppy time, in the charts?
Yeah, absolutely. And you know, again, the price action itself produces these indicators. So a moving average is a result of what did happen. Because I think most of us all have it set on probably the close of the candle. I mean, even if you put it on the open of the candle, or sometimes the average of the high and the low, that's where that OLC4 or whatever comes in. Not a big difference on any of those. And sometimes where Anthony's RSI or these stochastics can aid in all this noise with these wicks and candles, is it can kind of filter out some of that noise. And that's probably one of the big takeaways, is when you have like an RSI or stochastics or any indicator that is giving some clear information. And again, there's just an edge that comes with information. There's never a sure deal. But even more importantly is a simple moving average, your 10 EMA, or 1 minute 50 EMA. That is really all that's needed to do everything we're talking about. And when they're pointing up 45 degrees, you've got a healthy trend. Candles are opening higher and closing higher. You got higher lows and higher highs. Moving average pointing up. That's all I need. Moving average now is flat. Okay, that brings in wicks, it brings in noise. You know, it brings in a change in some of these other indicators, you know, the RSI stochastics. You know, and now when they're not flat anymore. You know, again, you kind of breaking out, they're not flat, you know, they're not flat. Well, neither is the RSI or stochastic. So again, the moving averages, but where I believe there is a absolute edge, and for me, and I can kind of prove it with my data, and win rate is don't trade against the moving average. I mean, it's that simple. You know, if I'm above the moving average, I'm long. If I'm below the moving average, I'm short. Now we've highlighted some variances, again, 5 points back to the moving average, upper wicks. These are all shooting stars. You know, I'm like, man, that's the exception, not the rule. But following your rules, I'm short when I'm below my red line. I'm long when I'm above my red line. I'm short when I'm below the red line. Cut my losses when I'm back above. I'm short when I'm below the red line. That's that simple. RSI, it's moving up. Well, so is my moving average. RSI divergence, it's coming down. Candles are still going up, but my moving averages are flat. Moving average is slightly going up with a stochastic or RSI slightly down. Divergence, what does that tell us? Biggest thing it could tell us and should tell us is like, hey, it does look like that buying pressure is definitely slowed down. It has slowed down. Is it consolidating and is it going to continue? Or is it consolidating and it's going to reverse? We wait. Then we don't buy just because we're right below a moving average here. But now we get candles open and close and we're rejected below it. Now we've got some additional information here. And regardless of which indicator you're using, hey, and I'm coming from an overbought down to an oversold. RSI is an agreement, and I'm below the moving average. How do you avoid your bullish bias is so ingrained on your brain from being successful when the day started that every one of these candles, oh, a wick, hammer, I'm going along. Ah, wick, hammer, I'm going along. All right, maybe it's just a pullback. Oh, I got another bull, I'm going along. And then boom, 75 points later, you're down here. You know, and if you happen to kind of glance at maybe some other indicators, they were telling you that, hey, that big bull move might pause for a little bit. So just be careful. I hope you're hearing that. That is pretty, I think, important just to look at it through that lens. You know, kind of to try to look at it not as noisy as it is. Don't fight the trend. But it is as simple as finding a moving average that you're comfortable with. You know, I kind of shifted this white is actually the only reason I have it on there is really on the smaller time frames. Believe it or not. Because then I do have some decent space. I get a little representation on again, when it's really, I got a lot of space between the white and the red, it ain't gonna stay that way very long, because that's a 9 simple moving average versus the 1 minute 50 simple moving average. So I don't even need to go down that, didn't even mean to really go down that path. But it but again, once this white line starts kind of interacting back with the red, I'm out. It's too noisy for me. I have no clue what it wants to do from there. is the only reason that's on there. It does me zero good, 5 minutes and higher, zero. It's the same moving average, essentially. Okay, so hopefully that doesn't confuse people. That's one reason at one time I had this set up to where it only shows up for like on 2 minutes or less. So if I ever jump into I get rid of some of this. So if I ever jump into a 2-minute time frame, well, then I've kind of got it. And it just gives me, again, everything we just talked about. I'm just wanting a little bit quicker way to me visually see, hey, what is price doing relative to my 1 minute 50 SMA? Because that's my go-to. 10 EMA, 5, 15, very similar. It doesn't matter which one you use. I think what's most important is, what are you comfortable with, and are you consistent? And what is your entry and exit criteria if it is tied to a moving average, which I believe is a very positive thing to consider. When you wait for this, again, we're below the moving averages. We break above here. We're kind of staying above it. I'm not looking at going short here, even though I've got a couple bear candles in there. We took out Globex high. No, I'm not going to fight that moving average. So yeah, I'm starting talking circles there, but a simple moving averages, they give us a visual of what that trend is. And where I've really benefited in recent weeks, especially when we come out of that slower market where I could DCA almost on any trade and never have to worry about it because the volatility was not there. That is a whole different type of trading. Well, now with this volatility back, that 1 minute 50 SMA and not trading against it is hands down the most important rule in my playbook. With the exception of the 5-point little scalp and stuff that Anthony kind of talked about. But a moving average, yeah, that becomes a way for us to really define some really objective criteria of how long we're going to stay in the trade. Hey, I'm wrong. I'm going to go ahead and get out. I'm only down a half of an R, third of an R, whatever your risk is. It's like, I know that, hey, this could come back. However, there is a high probability it won't, but because I know that I'm going to have this eventual break and remain below my moving average for 30, 40, 50 points, that opportunity is going to present itself. If not today, 3 times tomorrow. Keep those losses small. Keep those losses small. And that kind of rounds today up a little bit. Again, trade management. I just can't stress the value of, we talked a lot about it last week, but looking for these micro trends within the range. Today was not a beautiful day to trade. One of my most perfect days, but it wasn't a pretty day. Here to me was kind of a challenge, but yeah, yesterday. So hey, as long as I'm above the 1 minute 50 SMA, only gonna go long, period. Okay, start losing some pressure here and kind of look at Anthony's RSI would look very similar to this. The stochastic, it just flattens out. Price actually still kind of making a few higher highs. Okay, kind of comes down. we come all the way down here, but see, we just barely come down and don't even test our 5-minute 50 SMA. You know, now so if we're, if we got 30, 40 points in here, and then we didn't trade again until we maybe see this hammer close above, and then we wait for a retest, and now we're having candles open and close above, we get in. Can we get another 20, 30, 40 points in there? Good target is also your 51-hour SMA here. But all of a sudden now I'm moving average is flat. Oh, look at my RSI or stochastic. It's also pointing down. I'm opening and closing below my 50-minute SMA. I get a nice rejection here, another 40, 50 points. Rules-based, follow the price action itself. If you're making lower lows and lower highs, or higher highs and higher lows, and you've got that visual confirmation of the moving average you're comfortable with, and cut those losses, keep them small. When it crosses over your moving average or traps, you know, if you're in a long trade and you got a fairly decent size bull candle, this never gets trapped, no trap. Here's really our decent sized bull candle. Let's say if we got in down here, so we got good money. Now we want to start, we're losing pressure. We're looking at our RSI, we're looking at stochastics, whatever. Hey, we did hit a valid target. Large bull candle here. Now I got a wick, I've got a smaller candle. I'm like, you know what? Anywhere in here, I'm done. You know, this is a good place to take some profits off the table, not even waiting for this full bull to get trapped. Because look at the move you've had already. Now, if you do, you're getting out over here, not a big deal. It's a beautiful move, but then you're going all the way from up here to 519, clear down to the bottom of this candle over here, possibly hitting your stop at 478. So again, that's 40 points that we kind of gave back when we just have a lot of reasons to possibly get out a little earlier, you know, and that's where things are we're up in this overbought area, again, above the 70, 80 on an RSI or stochastics, MACD, it doesn't matter. But you got a rejection wick for one, and then you get a couple bear candles coming in, but I don't necessarily want to wait for a decent sized bull candle to get trapped before I exit. That's the trade management piece that I'm kind of after. If I got I stayed in the trade here. This is not a scalp, but an actual trend move. I stayed in. I was really going for a target, and I'm looking for exit criteria being met. Really, this candle right here is a big red flag. If I get back in, when I'm above a moving average, this is a good takeaway. When I'm above a moving average, I'm generally looking for it to come down and then back above it before I get back in. I don't just get right in right below a moving average. And, you know, because here we're back above, but here's the second best thing. Well, actually, really the best, because clear rejection. That's what I'm waiting on. So again, it's just like any type of support or resistance. We break through, we retest, and then she fails the retest and then continues higher. That's no different than conversation even today, trying to figure out what's happening here. I wanted to see actual candles open and close below here, and then if it came back up, then it rolled over, then I'd be looking to get in below my moving average. But I want to see, I usually don't want to get in on that first breakthrough below. And again, it's no different than a you know, if we get in here below a moving average, well, she's going to come up possible for a double top. So it doesn't matter if you're at the bottom, got a nice even hammer right there, we cross over a moving average, there's a retest, and does it continue back up, or does it continue down? And that's just kind of a rule I have is, especially with the moving average conversation, is I'm very cautious. I don't just get in unless I've got clear reversal criteria, like a nice liquidation, strong move down, and then a hammer coming in. Then I necessarily won't wait for that break back above and then below again. I may not wait for that double bottom to form because of the scalping micro trend range trader I am. I'm going to take those profits off the table. Down here. I may take some profits off the table there if it looks like she's going to do that anyway. Because how many times you got 40, 50 points right in here, especially if this is a hammer. You like my hammer? But, so there's a nuance to everything that we can talk about. There's a nuance. And that's where I love these indecisions. I love these hammers. That's really the two today that, well, then we started looking at this up here. Those are really the ones, but one trade today, or just even if it was 1, 2, here's Trilly, it comes all the way down, up, retest. That's kind of the lower, a higher low on a double bottom that she takes off. So everything we just kind of talked about, there's an example there. If you get in here, well, then you take some profits off of there. That's a pretty big move. Get in above that, clear up to there. Let's say you wait for a clear buy. So that's 38 points, and that's waiting for this bear to develop. Okay, then you see a beautiful hammer here. And I'm back above my moving average. So above the moving average, wicks down below, beautiful hammer back above. And now I kind of got these wicks right here, but let's just say, boom, see that inverted hammer right there, another 37. I mean, that's just wait for that setup. And it might even be on a bullish market, I'm getting in on the hammers at the bottom, where at the top, I'm kind of a little more cautious and I'm waiting for a double top to mature. That's probably a big takeaway. In the bullish market overall, again, we're trading above our 50-day moving average on the daily time frame. We're just recently, we've been coming off of some higher highs, but the overall market is still considered bullish. I do a lot better if I do. In other words, I don't just get in every shooting star. I may exit, take profits off the table, a shooting star on a long move. But for me to go short, I am looking for that confirmation that we've got a reversal going on. And generally that is a valid double top, and waiting till I'm back below my moving averages a second time after that second double top has given us that confirmation. Where because it's a bullish market, if I see a good clear reversal candle hammer at the bottom, I am looking at getting it, because those bounces are pretty strong. They're 30 plus points regularly. I'm very seasoned in the sense of, hey, we might retest that low again. There's that second part of that double bottom, but I've already got 30, 40 points into it. I'm not going to stay in it. While I expect a double bottom, I expect a pullback. And if we make a higher low and we get another bullish candle right here, it confirms the double bottom, a higher low, and this entry stands on its own merit. This entry here stood on its own merit for 30 points. This candle right here stands on its own merit. This right here puts me back above my moving average. This right here was reversal and respecting my 5-minute 50. And I'm just going to ride it up until I can't anymore. then this bear candle starts coming in, I'm taking 30 points. This confirms our bullish bias, a high or low. Plus it's just it's a nice conditions-based entry candle. And I'm back above my red line. So those are just observations. Again, I respect the bulls far more, so I need a mature reversal at the top where these hammers at the bottom, those are a lot quicker decisions to get in and right on up. Now, if we were truly in a bear market, I suspect it'd probably be the opposite. We'd be looking for a single shooting star at resistance and be looking for bearish trades for the most part. Before we were to go long in a bearish market, we'd probably wait for that confirmation of a true double bottom and a reversal. Just something to keep in mind. Something to keep in mind. All right. It's an hour and a half. We're not going to go 2 hours today. We could talk 4 or 5 hours. But I did want to kind of, hopefully I got just kind of repeated a little bit, like on the trade management. You know, again, the moving average, it gives us everything we need. We introduced or kind of talked as a group a little bit about the RSI and the stochastic, why it's valuable. It does not stand on its own. However, it can definitely give us more information or confirm what we believe we're seeing anyway, just by looking at the behavior of the candles relative to our smaller time frame moving averages. And when we do look at the RSI or the stochastics, and maybe we are starting to speculate or we're very bullish, what I'm finding is, hey, wait a minute here. Here is some logarithms that are based on recent price action that really say the average divided by themselves over the last candles really not as bullish as I think it is anymore. So I'm not going to argue that at this moment in time. If I really think it's going to go short, my double top is kind of proved, my below my moving average and my RSI/stochastic agrees. If my moving average is going flat, candles are getting a little noisy, a little wicky sideways, I have no idea if it's going to continue going up or it's going to roll over. Let's take some profits off the table and let things kind of consolidate and wait for the next setup. Let the next entry stand on its own merit. Just because we had a very bullish open doesn't necessarily mean we're going to be, did I say bullish open? The overall market is bullish. So we've got to respect the bears, but we're looking for longs for the most part. There are conditions and reasons to scalp, maybe take some small gains in the shorts, but predominantly you're going to make more by trading bulls going long in a bullish market. Keep it simple. Make it objective. Don't fight the market. Don't fight the price. Don't fight your trend. When you start getting trapped and there's follow through, might be a good time to exit. Get out. Could be a change in direction. Might just be a healthy pullback. Might be fine. But watch your drawdown, because that could be a 50 point candle. 50 points comes in right here pretty quick, but we come right back and stay in the trade, no problem. We're profitable. But what was your size? And did you get back in to recover that trade? You know, I mean, that's where that's where size is important. If you're long anywhere in here. I think it's just always to understand that at any moment in time, a 5 or 1 15-minute candle could come in and bring you all the way down here to VWAP. That's inherent in day trading. You know, you get up and just go to the restroom real quick. You know, I mean, if you're moving up, I am in this market today. I'm very stingy with my stops now. Very stingy. If I'm locking in profits here, I don't like to. If I am going to get up and walk away, then I've got my stop below. Like say, if I'm up in here, I've got my stop below this candle, and then later on it might be below this candle. If I'm going to switch over to a different screen or whatever, I'm not going to come back, look at my screen, and I'm down, 70 points. So, but my size will always handle. Kind of like I got jacked up here, ended up kind of going short here. I was below. Well, the next thing I'm above, I didn't exit, didn't take the loss, and I started getting a little uncomfortable here. But my size was fine up into here. If it would have shot up and went up to this other 4-hour resistance, I would have had a bad day. I would have had a bad day. But I was at a decision point right here, and then this candle come in and saved the day. So, all right. Not used to seeing this. This is a 1 5-minute candle, and this was done like in the first minute and a half. I think this is when Trump had made the deal with Mexico. So the tariff news gap, and now deal with Mexico, and then I think later on conversation with Trudeau. That's Jake's theory, because I got updated on my news and everything after I was done trading, and he had meetings with the Mexico president, and then later on with Trudeau. And I if this gap down is based on the tariff conversation, and then you got the Trump factor, it comes in. This is where I was talking about at the beginning of the call. Not used to seeing 112 up to 328 in 5 minutes, a bullish move. There was no news catalyst scheduled. There obviously was a catalyst. But I think that's when the tariffs were put on pause for 30 days with Mexico, 10,000 troops, Mexican troops on the other side to support everything Trump wanted. That is important. The only reason I share that is we got to keep in mind we've got a different POTUS than we've had in the past. We've got a POTUS that is going to affect the market with the decision he makes a little bit more than the previous. So, and I just found that fascinating yesterday. Fascinating. So I'm like, what's causing this? I don't have any news or anything. And then just kind of putting 2 to 2 together. If this is tariffs, which Anthony, I think you nailed it at the beginning of our call. Well, I think this is a pause to those tariffs, at least for the 30 days, with very positive relations with, at least perceived positive relations with the way forward temporarily. And so instead of DeepSeek a week ago, where it continues down another full 1,000 points, bad news comes in Sunday night, Monday morning, but it just grinds back all day long. So fascinating. And we've got to, that's one reason the conversation we had today, I think adding in, an RSI or a stochastics, just something else to say, hey, am I in the trade too long? Is it losing steam in one direction? Protect those gains and prevent those losses. You don't want to be short. You don't want to be short. You're below your moving averages. You're below VWAP. Oh, we're breaking below our 1 hour 50 SMA. So I'm all in. I'm going short. Yeah, we're going to come down here and retest this low down here. You get up and walk away. 5 minutes later, it's just everything changed on you.
You may want to have the news on while you're trading. I mean, look how quickly the trend reversed. There's
Yeah.
no way you could have seen that coming. He's like the Fed on steroids. When the Fed speaks, it moves the market. The problem is he's talking all the time, and so it's been very volatile.
Yeah, we would
Yeah.
expect that with like FOMC notes or
Yeah.
detail interest
Right.
rate announcement.
Uh-huh.
But no, here's
Yes.
just a random update. Trump just got done talking with President Mexico. No. But
Yeah.
the other takeaway is again, respecting this move down. How many times do we come down and a little bit below VWAP, but how many times we just wait for that first 30 minutes to an hour, that liquidation, the flush in the morning. And then, that's one thing I've learned is I never count on a follow through. How often do we just have bearish trends all day long? We have maybe a couple every month, and that's about it. Just if you was to wait 30 minutes to 1 hour every morning that the market does kind of come down initially, wait for that hammer to come in, and then that's the low of the day. Good exit criteria up here, because a lot of times we'll come back and a double top, and then she comes down and it does break through that. But if you had just one trade a day, you wait for that liquidation flush 30 minutes to an hour in the morning and then go long. Could be done. Be amazed at how profitable you'd be over time. One trade a day. That's all it would take. All right. I'm done talking. Glad y'all could dial in. And I hope today was valuable. I mean, again, trade management, volatility, and the power of an RSI, stochastic, a MACD, adding that, because when you're on the right side of your moving average, and then you start paying attention to your other indicators, they can start speaking to you a little bit different. You're going to start understanding behavior. That's the value of trading, a similar asset over and over. You also become intimate with its behavior. Now, the Trump factor is something that's challenging, but we just know how quick things can move. And us coming together, recognizing that, hey, volatility is a little bit different than it was on the last 3 months of the year. Now that the holidays is over, hey, that's just great accountability, great information to discuss. It's like, okay, what does that mean for my rules? How does that affect my trade management? And it does affect it. When you don't care if you ever get in the trade in the right direction, when you can always recover from a position, even with a trailing drawdown, that is a whole different type of market than what we're in today. DCA is awesome, it's powerful, but it's only an offensive weapon to add to your position to get the size you want in the right direction of the trade. But in this particular market here, you don't ever want to use it to recover a trade. You really want to be patient and before you add anything. So I just believe that's real important with the volatility. It's a different type of market than it was a month and a half ago. So, all right, any go backs? Okay, cool. Let's wrap it up there then. Again, follow your rules. Make them objective. Don't speculate. And there's a lot of opportunities. And just wait for that setup. Wait for that setup. Don't rush any trade. Today was kind of fun, and it was rules based, and I spread things out across different accounts and different trades, and each trade had to stand on its own. Even though today's market really wasn't all that awesome, but I was just like, dang, when it's objective as it is, things really worked well. Things really worked well. So I'm like, if I can make money in a market like today, should be able to make it any day. Should be able to. So I have to really reflect and journal and say, okay, what things did I do today that did work well? and that's another power of this group is again, just making sure that I was never long. You know, if I'm below my moving average and there was a lot of weakness in the buying pressure on the upper part of the range today, and I'm below those moving averages, I was only, even though I was scalping, I was only going short. And so when those long candles come in, 50 points in 30 seconds, I was in the right direction. Or if I would have been fighting that 50-minute, 1 minute, 50 SMA, saying, hey, I want to get 5 points back up towards it. No, you're below it. Don't fight it. Those would have been big drops. And that's something I've learned the hard way, fortunately. Do not fight don't fight even the short-term trend. Short-term trend. It's not this volatility. So, okay, done. Y'all have a great week. Michelle, it's so good to see you locked in. I think you did drop off. I'm so glad you did make it in.
Thanks, Jake.
All right,
right,
thanks,
Sean.
Jay.
All right, have a great week.
All right,
do the
take
same.
care. All right, bye.